You know that feeling when you open your crypto portfolio and instead of immediately closing the app in a cold sweat, you actually feel calm? Like when you stop calculating whether a 5% dip is going to wreck your month, or whether you can afford to hold through a correction without panicking and selling at the worst possible time. There's a specific number where this shift happens in crypto, and it's not what most people think. Most people in the crypto space will tell you that you need to be a Bitcoin whale to feel financially secure, that 6 figures is the entry point for real wealth, that until you're holding hundreds of thousands of dollars in crypto, you're just playing around. But here's what they're missing. There's a much smaller milestone that completely transforms your relationship with crypto investing, and once you hit it, everything changes. That number is $20,000. If you're someone who wants to understand the real mechanics behind building lasting crypto wealth instead of just hoping the next bull run will fix everything, make sure to hit that subscribe button and give this video a thumbs up if it ends up changing how you think about your portfolio. Now, before we get into why $20,000 is the real game changer, let me ask you something. When you think about building wealth through crypto, what comes to mind? Maybe you picture someone who got in early on Bitcoin and never had to worry about money again. Or maybe you imagine yourself grinding through bear markets, holding through 70% drawdowns, slowly accumulating over years. The truth is, crypto wealth building doesn't work the way most people think it does. There are certain financial thresholds that act like invisible barriers. Once you cross them, the rules of the game completely change. $20,000 is the first major threshold that separates the people who will build lasting crypto wealth from the people who will ride every cycle up and back down again, ending each one roughly where they started. And the wild part is, most people have no idea this threshold even exists. Think about it this way. If you've ever tried to push a heavy boulder up a hill, you know that getting it started is the hardest part. You're straining, you're barely moving, and you're questioning whether any of this is even worth it. But once you build enough momentum, something shifts. The boulder starts moving faster. And eventually, when you reach the top, it rolls down the other side almost effortlessly. $20,000 in crypto is that turning point. Everything before it feels like you're pushing uphill against gravity. Everything after it feels like gravity is finally working in your favor. But here's where it gets really interesting, and this is the part that will probably surprise you. The difference isn't just mathematical. It's not simply that you have more money generating returns or that your gains are larger in absolute terms. The real magic happens in your brain. When you don't have a meaningful crypto position, your brain operates in what psychologists call survival mode. Every market move is filtered through fear and scarcity. You buy into pumps because you're terrified of missing out. You sell during crashes because the fear of losing everything overrides every rational thought you have. You make decisions based on emotion because you don't have enough of a position to feel secure riding out the volatility. This isn't about being a bad investor or lacking discipline. When you're in survival mode with your portfolio, your brain literally cannot think clearly about long-term growth and strategy. It's like trying to plan a decade of investing while the market is crashing 20% in a single day. Your mental bandwidth is completely consumed by immediate threats and short-term panic. But something remarkable happens when you cross that $20,000 threshold. Suddenly, your brain has the space to think differently. Instead of asking, how do I survive this correction, you start asking, how do I use this correction to grow my position? Instead of reacting to whatever the market does today, you become strategic about where you're going over the next 5 years. The volatility that used to terrify you starts to look like opportunity because you have enough of a foundation that a 30% dip doesn't feel like a personal financial catastrophe. Here's where the math starts getting really exciting. Let's say you're putting $1,000 a month into crypto and earning an average 8% annual return on your portfolio. Getting to your first $20,000 takes about 19 months of consistent buying. That's a year and a half of discipline, of holding through dips, of not panic selling when everyone on social media is calling for the end of crypto. It's not easy. Most people give up somewhere along the way. But here's the part that changes everything. Your second $20,000 doesn't take another 19 months. It only takes about 17 months. Why? Because now you've got that first $20,000 working alongside your monthly contributions, generating its own returns. You did the exact same work. You bought the same amount every month. You took the same level of risk, but you shaved 2 full months off the timeline simply because you had more money working for you. That's the power of compounding starting to kick in.
By the time you're going for your third $20,000, the timeline shrinks even more. Your portfolio is doing an increasing share of the heavy lifting while you're putting in the same effort. And when you get to the really significant numbers, the acceleration becomes almost hard to believe. Once you have $400,000 in your crypto portfolio, you can generate your next $20,000 in about 5 months. The same amount that took you nearly 2 years to save initially is now happening automatically through portfolio growth. The first milestone feels nearly impossible. Every milestone after that gets progressively easier. Now, you might be thinking that people with large crypto portfolios have access to some secret world of opportunities that regular investors can't touch. Special early access deals, insider information, exclusive networks that only open up once you reach a certain wealth level. And while there is some truth to that at the very high end, that's not what's driving this $20,000 phenomenon. The real secret is much simpler and honestly much more encouraging. It's just mathematics working in your favor. When you put $1,000 into crypto and it goes up 10%, you made $100. Take that exact same 10% gain and apply it to $20,000, and suddenly you're looking at $2,000 from the same market move, the same time frame, the same level of risk. This is why hitting $20,000 feels like such a turning point. Up until that point, your gains feel almost insignificant because you're working with smaller numbers. A 10% move on $2,000 is $200. Nice, but not exactly life-changing. A 10% move on $20,000 is $2,000. Now we're talking about money that actually matters. When you've got $20,000 sitting in crypto earning even a modest 8% annually, that's $1,600 flowing into your portfolio over the course of a year without you doing anything. Money you didn't have to earn through your job. Money that showed up because your existing position was working on your behalf. The strategy doesn't need to be any more sophisticated than someone with $1,000 can use. You can buy the same assets, use the same platforms, follow the same basic principles. The only difference is scale. And that scale transforms small percentage gains into real financial progress. When you have a small crypto position, every market dip feels like a disaster. Bitcoin drops 20%, it's a crisis. An altcoin you're holding gets cut in half, it's a catastrophe. These moves feel devastating because you don't have enough of a foundation to absorb them without it mattering enormously to your financial life. But when you have $20,000 in your portfolio, these same events look completely different. Bitcoin drops 20%, that's a buying opportunity you can actually act on. An altcoin pulls back hard, maybe it's time to average in or reassess your position calmly rather than panic selling at the bottom. Even better, you start noticing opportunities that were always there, but you couldn't access before. A promising project launches at a low valuation. Before, you would have thought, that sounds interesting, and moved on because you had nothing meaningful to deploy. Now you can actually decide whether it's worth allocating $2,000 or $3,000. A market correction takes everything down 40%. Before, you would have been too scared to buy more. Now you have the position size and the psychological foundation to see that correction for what it actually is. This is what experienced crypto investors mean when they talk about having dry powder. It's not some mysterious advantage available only to wealthy people. It's simply that having a real position gives you options, and options create more opportunities to build wealth. Here's something else that happens around the $20,000 mark that will make you rethink everything you thought you knew about managing a crypto portfolio. You stop obsessing over small daily moves and start thinking about big structural decisions. I know that sounds backwards. You'd think that having more money would make you watch it more carefully, but the opposite happens. When you have a small position, you obsess over every percentage point. You check the price 7 times before breakfast. You refresh your portfolio app constantly looking for signals that something is about to change. These habits consume massive mental energy because every small move feels significant relative to what you have. But when you have a solid foundation, you realize these micro movements are largely irrelevant to your actual financial future. The difference between Bitcoin being up 3% or down 3% on a Tuesday afternoon is not going to determine whether you build wealth. What matters are the big structural decisions: how much you're accumulating consistently, how you respond to major bear markets, whether your overall strategy is sound. So instead of agonizing over daily price action, you focus your energy on the decisions that actually move the needle. This shift is incredibly liberating because it frees up mental bandwidth for thinking strategically about where you're going instead of reacting to where you are right now. Now let's talk about what happens to your relationship with risk once you hit this milestone, because this is where things get really interesting. Having $20,000 in crypto doesn't just change your relationship with the market, it changes your relationship with financial risk in general. When your crypto position is small, you're essentially at the mercy of market sentiment. A bad week can feel like it's setting you back months. This puts you in an incredibly vulnerable psychological position. You can't think long-term because the short-term feels too unstable. You can't take calculated risks because every risk feels existential at your current position size. But $20,000 changes the entire dynamic. Suddenly, you have what I call staying power. You could watch the market drop 50% and still have $10,000 working for you. You could go through an entire bear market without being wiped out. This doesn't mean you should be reckless or ignore risk management,
But it means you're operating from a position of stability instead of fragility. This psychological shift affects everything about how you approach investing. You start holding through corrections because you know the foundation won't disappear. You stop making desperate trades trying to recover losses because you don't feel desperate anymore. You start thinking in years instead of days because your position is large enough that the long game actually makes sense. Here's what's really interesting. You often don't even need to use that staying power. Just having it changes your entire approach to the market. You become calmer, more patient, more willing to wait for genuinely good opportunities rather than chasing every move. And what happens when you show up to the market that way? Your decisions get better. Your returns improve. Your wealth compounds faster. It's a positive feedback loop that accelerates the longer you stay in it. This mindset shift extends to every major financial decision you make around your crypto portfolio. How much you allocate, when you take profits, how you respond to new opportunities. Everything gets filtered through the lens of protecting and growing the foundation rather than chasing the next big thing. And let me tell you something that might surprise you. Once you start thinking this way, you often realize you don't actually want half the things you thought you wanted from crypto. That 100x altcoin bet? The excitement would be nice, but is it worth risking the foundation you spent 2 years building? That new trading strategy someone explained in a YouTube video? It sounds compelling, but there are probably more reliable ways to get to where you're actually trying to go. This isn't about becoming so conservative that you miss every opportunity. It's about becoming intentional with your position, instead of letting excitement and fear make decisions for you. When you have clear financial goals and understand the power of compounding at scale, it becomes much easier to distinguish between what seems exciting in the moment and what will actually get you where you want to be. Look, $20,000 in crypto isn't going to make you rich overnight, but it will fundamentally change how you think about the market, about risk, and about what's actually possible for your financial future. It's the difference between surviving every cycle and actually building something through each one, between reacting to price movements and designing a strategy that works regardless of what the market does next. Start building that foundation today, because the version of you on the other side of $20,000 operates in a completely different financial reality. And the decisions you make right now, whether you hold through the next dip, whether you stay consistent when it feels pointless, whether you protect what you've built instead of chasing what's shiny, those decisions determine which side of that line you end up on. Your future self is counting on what you do today. Trust me, they'll thank you for it.